Morning, everyone. I'm Greg Faranello, head of U.S. Rates for AmeriVet Securities. Welcome to Monday Minutes. Brief look back to last week. Employment Friday, better than expected jobs number, which is good. We continue to see people come back to work as the economy reopens, which is positive. The number slightly lower than some of the bigger numbers that we've seen in the prior months. But to us, the momentum here is still in the right direction. We're still bringing jobs back. We still have a lot of wood to chop with regard to the job market. Still over 30 million people with some form of unemployment insurance, including pandemic insurance. But nonetheless, any progress here is and should be viewed in a positive light. Looking ahead to this week, over the weekend, obviously, executive orders from the president. To us, look, the bottom line here is something needed to change. The dialogue needed to change. And when you look at executive order, it's really not just the Republicans and the president right now. Even President Obama had used executive order very frequently with the inability of Congress to actually enact legislation. This is something we've really seen gridlock in Congress over the last 10 years. With regard to this particular piece of legislation, something clearly needed to change. I mean, we can't walk away from the underpinnings of what's needed now with regard to the pandemic. People that are still unemployed, no fault of their own. At the same time, you look at the jobs number, we are seeing people come back to work. So there really needs to be a balance here. We need to strike a balance of the proper underpinnings in conjunction with also giving people an incentive to come back to work as the economy continues to reopen through the summer and into the fall. And hopefully we find a vaccine and better therapeutics to combat the virus. So in general, we have been constructive that a deal would get done somewhere in the range of 1.5 trillion. We still think that a deal is plausible here. We think clearly the president has pushed the hands now of not only the Democrats, but the Republican leadership to plow forward and get a proper congressional deal done. Looking more specifically to this week, we have Treasury supply, record supply, raising somewhere in the range of 62.5 of net new cash. Last week we talked about the deficits, 2.7 through the first 9 months, projected to be roughly 3.5 to 3.7 for full year. So Treasury funding needs here still consistent. The Department of Treasury had in their latest estimates $1 trillion factored into their numbers going forward. So if we are correct with a larger deal, we expect the funding needs to grow over time. So we get 3s, 10s, and 30s starting tomorrow. Long end supply. We take that supply into the marketplace now with Treasury yields, still nominal yields, still toward the lower end of their range at 10 years, right around 55 basis points. And obviously with inflation expectations moving up aggressively in July, we continue to see real yields near or close to their lows. With regard to economic data, we have some high frequency data later in the week. We get retail sales. We see similar numbers out of China later in the week. Earlier in the week, we get CPI, PPI, we get the inflation numbers, which we still will largely discount in this environment as the economy continues to reopen. We do get Michigan confidence, and we get industrial production and capacity utilization as well. Wishing everyone a great week. I'm Greg Faranello, and this is Monday Minute.